It's not gambling if you focus on predictable patterns. If I do the same kind of trade over and over again, it is so much better than any single game here in Vegas. Look at today's low. Put your mouse right over the today's low around 21, 20 cents, right? And then pull it to the top at 30 cents. 20 to 30 cents inside of basically an hour and a half. 50% on your money. Now keep that, in perspective. If you make 50% in a year in a mutual fund or one of these big, hedge funds or any kind of long-term investment, that's a fantastic year. This is in an hour. And mind you, I didn't time it perfectly. I was in at 21, out at 25. I only made 20%. But even making 20% inside of an hour is very good. So this is the kind of volatility. And that's why I always laugh when there's so much hate with penny stocks. Like they say they're all scams, they're manipulated, they're unpredictable. I mean, I have 800 plus video lessons on my website with this one morning panic dip buy pattern. And those are just the video lessons that I've recorded in the last 5 years. There's probably been, I don't know, maybe 20, 30,000 examples. If anybody is smart enough to do a back test on this, where you're dip buying a penny stock that is recently strong over several days, over several weeks, and crashes 50%, especially near the market open, when probably some restricted stock becomes unrestricted, maybe some stop losses are going off, that creates opportunity. And even now, I didn't have to sell it. I mean, it's still at 24, but it did get up to 30. So you get to choose how aggressive you want to be. Do you want to sell it in the same hour and lock in 20% like I did? Or I guess I sold it in 30 minutes. If I had held another 30 minutes, it would have been a 50% gain. But if you make 20%, if you make 50%, when you dip by these morning panics, the odds are on your side. And that goes against everything that this place is built on. That goes against everything that Vegas is built on. That goes against everything that brokerages are built on. You have to understand, Vegas makes a lot of money. Wall Street makes a lot of money because they're taking money from people like you who partake in these low odds games, and I want you to be better. Okay? I don't want Vegas to make money off you. I don't want Wall Street to make money off you. I don't know how to beat Vegas. If you're going to ask me how to do that, I don't know. I don't think that there's a high enough odds game here, so I don't play any of that. If you ask me do I gamble? No, I can trade penny stocks. Okay? And people laugh. They're like, oh, you trade penny stocks. Of course you're going to shut up. Okay? I've heard this all my life. It's not gambling if you focus on predictable patterns. If I do the same kind of trade over and over again, it is so much better than any single game here in Vegas. That's what it comes down to.
So one of my agenda items to talk to you about was what's the why? Why do these patterns repeat over and over again? What is your opinion? Why does this niche still work 20 years later?
So guys, have you seen the movie The Truman Show? Raise your hand if you've seen The Truman Show. I have a very good feeling that there is the Tim Sykes show going on, and everything is coordinated to give me the life that I currently have, and this is all a simulation. And I agree with you. No, I don't know. I don't know why it works. I really don't. I can guesstimate that it's because when these stocks that crash, the promoters don't want them to crash that much, because if you have a penny stock that's dropping 70, 80% in a day, then a lot of the people who believe in the penny stock will then complain to the SEC. The SEC will probably investigate. The promoters will get shut down. So the promoters, it's in their own best interest to hold the stock up. That's one theory. Another theory is that a lot of people just miss out on this big run-up, and when it drops 50% off, it's like a Black Friday sale, so they're all excited to dip buy it. So you have two different groups that it's in their own best interest to buy, whether it's the promoters who are trying to support the stock to make it look stronger than it is, or the degenerate dip buyers. Question in the back?
Yeah, what kind of volume do you trade?
What kind of volume do I trade? I had about 22,000 shares in this stock, so about $4,000, $5,000 worth. So again, I trade with small amounts. That's the thing here. I don't want you to think like this kind of a chart is going to make you $1 million.
But that's the beauty of this, is that, again, a lot of these, when Tim was talking about them joking about them making the 350,000 when he thought it was 350. Well, I'm guessing none of you guys have $1 billion account to swing that kind of line. We can make 20, 50% with a $4,000
Correct.
position.
You can't take $1 million position on this. The thing only trades.
Unless you're a Robinhood and using the infinite.
Yeah. But it trades, at its peak, 15 million shares on the day at 40 cents. So it's trading just a few $1 million worth on the day. But again, if you take a position of a few $1,000s and you try to make 200, 300, 400, you can do that again and again and again. So that's why I keep it small, and I'm proud to keep it small. Question back here?
Do Yeah, how, you say the vast majority of penny stocks don't go anywhere or invest. How are you filtering and finding the ones, the other ones to try?
Yeah, so the question is, how do I filter penny stocks? Literally, I just focus on big percent gainers every day. That first big green day, that put it on my watch list.
So the big thing that we're looking at is again, notice how this is the highest volume in a year. That first green day Tim is talking about, this first candle, notice how it's the biggest candle. I mean, even though it had been uptrending, you see that candle is 5 times the range of any previous candle. It's the highest volume in a year that shows up on all of our scanners. That's how we know.
Can you pull up TTCM?
Sure.
A little like a 6-month chart.
Yep.
This is another one that I nailed. It's actually more than do 1 year. Yeah. So you can see here, it was going up and then it was kind of doing nothing. But right here in 1 day, big volume, and that was actually a Friday. And I bought it on that day on a Friday. They had positive news with their technology, like unveiling. You have to understand, it's not about the technology, it's not about the products, it's just hype and perception. So they introduced their product that day, big volume, big breakout over previous highs. I bought the stock into the close on Friday. A lot of the time, people research over the weekend. A lot of people hear about this stuff later because there aren't very many meticulous penny stock traders.
Well, that's real quick before you move on. That's the great part about these setups too. Is you don't have to be first. I mean, that's the greatest thing. Is like Tim said, people find out about these after the fact. So you can see, I mean, TTCM had like 6 green days in a row. You don't have to be first.
But I also wouldn't chase it. I like buying on the initial breakout. I bought it at literally right around a penny a share. The next Monday, after it had been hyped up all weekend long on like websites like Investors Hub and Raging Bull, and there's all these message boards and all these promoters are hyping it up. Everyone's like, "Oh, I'm all excited!" And the stock gapped up 40%. I sold, and then the thing proceeded to triple. So I'm not trying to time it perfectly. I never do. I'm just trying to take the meat of the move, and that first green day with a big percent gain is important. Question in the back.
Every pattern works out statistically, so there is sometimes the pattern doesn't work out. What is the loss strategy?
So good question. So what is my strategy if it doesn't work out? I'm not right 100% of the time. This isn't like a Ponzi scheme bullshit. Like I lose roughly 1/3 of the time. Rule number 1 for me is cut losses quickly. So if I'm buying this stock, this one closed at its highs, and it also had news, also had big volume, so I wasn't really concerned, but I didn't know it was gonna gap up 40%. But guess what? If there was no gap up on Monday, I would just simply sell it at the market open, and I would try to cut losses as quickly as possible.
I think it seems really, really counterintuitive, but that's one of the reasons we love this niche is we know these are the worst of the worst stocks. So when you go in with that rationale.
No, not the worst of the worst. These are the best of the worst.
Okay.
They're the best at being the worst. Don't be so negative. Be positive. This is the best, worst company in the world. Look at this. This is the best, worst company.
Yeah, exactly. Look at the long-term chart. But we know that they're all going to fail eventually. So you go in with that mindset that you're going to stick to that small loss because it's going to spike and fail, and you're just trying to grab that meat of the move.
And so this is another thing. Not only do people hate penny stocks, but those people who do trade penny stocks and invest in these companies, they believe in them so much. Like, look at this. We had a nice breakout for a few days, and what's it done since? It's right back and down, okay? So if you just hold and hope, that's another mistake. So for me, again, I actually know this company. I actually know their bullshit technology, but I don't care. I'm just trading the pattern, and I'm partaking along the way. And I made my 40%, even though it turned out to be like a 200% winner over 2 or 3 days.